This week, one story dominated global markets: the evolving relationship between the United States, Iran, and Israel. At the start of the week, markets reacted positively after President Trump announced that a peace framework with Iran had been agreed upon. The deal included reopening the Strait of Hormuz, ending the US naval blockade, and beginning a 60-day negotiation period focused on Iran's nuclear program and sanctions. That immediately changed market sentiment. Oil prices fell sharply as traders priced out the risk of prolonged supply disruptions. With the Strait of Hormuz expected to reopen, concerns about global energy shortages eased, reducing the geopolitical premium that had been built into crude oil prices during the conflict. At the same time, stock markets rallied as investors welcomed the prospect of lower energy costs and reduced uncertainty. The S&P 500 extended higher, supported by improving risk appetite across global markets. However, the story became more complicated as the week progressed. Although the Memorandum of Understanding was formally signed by both sides, officials repeatedly stressed that the agreement was not the final deal. The next 60 days will determine whether a permanent agreement can be reached. Both Washington and Tehran continued exchanging warnings that commitments must be honored. Meanwhile, tensions between Israel and Hezbollah remained active throughout the week. Israeli strikes in southern Lebanon raised concerns that regional instability could still threaten the border peace process. Planned US-Iran talks in Switzerland were eventually postponed, highlighting that significant challenges remain. By Friday, markets received mixed signals. Reports emerged that Israel and Hezbollah had agreed to a renewed ceasefire, helping calm some immediate concerns. But at the same time, Reuters reported that Iran's Revolutionary Guards had allegedly established networks in Iraq capable of conducting drone operations against regional targets. Looking at the markets, the impact was clear. WTI crude oil dropped from the high 70s towards the mid-70 area as supply fears eased. Gold extended its decline as traders focused on the Federal Reserve's hawkish stance and reduced demand for traditional safe haven assets. Meanwhile, the US dollar recovered strongly as rising US rate expectations combined with lingering geopolitical uncertainty. The key theme now is simple. Markets have moved from pricing in war risk to pricing in negotiation risk. The conflict may have cooled, but investors are now watching whether the next 60 days produce a lasting agreement or renewed tensions. What do you think happens next? Does the US-Iran agreement hold, or could the next phase of negotiations create fresh volatility for oil, gold, and the US dollar? Leave your thoughts in the comments below.